Hello traders, Doc here. In this video I will talk about multiple time frame analysis. Please take a second to like and subscribe so I can continue to make more videos like this. On a trading view we can see here that there are many time frames that you can choose. Depending on a trading style you will choose different time frames, and what these time frames represent is the time how long it takes for the one candlestick to close. For example, now we are on 1 hour time frame as we can see here. So it took 1 hour for this candle to close, then next hour for this candle to close, and then again and again and again. But if you go down to a 15-minute time frame, that means that it takes 15 minutes for each candle to close. One thing is very important, and that is the fact that this exchange rate here is always the same. So it doesn't matter which time frame you choose, this exchange rate here is always the same. Your charts will look different because you are on different time frames, but this exchange rate is always the same. We can see here many time frames, and you can also make custom time frames. But the question is how many of these time frames is good to use. If you are a beginner, I recommend you to use one time frame and maximum 2 time frames. So you will have one higher time frame and one lower time frame. Usually on a higher time frame, let's say 1 hour time frame, you will analyze major zones, support, resistance, trend lines, highs, lows. And on the lower time frame, let's say 15-minute time frame, you will look for your entry levels. For example, you will look for candlestick patterns, also maybe chart patterns, some help of an indicator if you use any indicator. For example, I use stochastic RSI. So on a 15 time frame, my entry time frame, I can combine it with a stochastic RSI. So don't use all time frames, or let's say more than 3 time frames, because you will be confused. If you have many time frames, then you will have too many zones, too many trend lines, and you will simply be confused. So it takes a lot of time and practice for you to be able to analyze multiple time frames, especially more than 3. As a beginner, I recommend you to use 2 time frames. If you're a very new trader, you should use 1 time frame, and when you become more experienced, you can use 2 time frames. Of course, you can get to that level to use 3 time frames, but more than that is not necessary. Now let's look at these pictures, and later I will show some examples on the real charts. As we can see on this analysis here, we have 1 hour time frame and 4 hour time frame. On our higher time frame, which is 4 hour, we can see here significant zone. That means that this zone acted as a resistance here, then price broke it, and then this zone acted as a support. But then again, we got this bearish move, and price tested this significant zone again. We can see this bullish wick rejection here, followed with this massive bullish candlestick. At this moment you can say, okay, price is testing this significant zone, we have a bullish reaction, now I can scroll down on a lower time frame and look for my entries. Then you can scroll down on a 1 hour time frame, and what we will see here is a bullish reaction, pullback, higher low formation, and this massive bullish candlestick that broke this previous minor high. And next we can see this pullback here, and price tested this previous minor high. At this moment you can say, okay, so now on a 4 hour time frame I have this bullish reaction to my significant zone, and on 1 hour time frame I have this higher highs, higher lows structure. At this moment you can say, okay, price now retested this minor high, and now I will enter a buy trade. As we can see, price continued to go up. So as you can see, on a higher time frame we analyze this significant zone and the reaction to it. But on a lower time frame we looked for a structure, and we saw that price formed a higher highs, higher lows, and basically retested this previous minor high. That was the good point to enter a buy trade, and we can see that price continued to go up. On a second example, in a higher time frame, we will see this consolidation area, where price consolidated between this resistance zone and this support zone. We can see that price confirmed our resistance, went down, but then bullish pressure occurred and price broke this resistance level. So now what we have here is basically higher low formation and break of our resistance on a higher time frame. And on a lower time frame, if we analyze this, we will see that price formed series of higher lows and then formed this massive bullish candlestick that broke our resistance. And now you can enter after this massive bullish candlestick. Of course, you can be patient and wait for a retest and then look to enter here once price retests this previous resistance. And this is general idea how you can use multiple time frames. On a higher time frames you look for a major zones, and on a lower time frame you can look for your entries. When you use multiple time frame analysis, your plan is very important. We can see here that price tested our significant zone and formed this bullish reaction. So now you say, okay, I see this bullish pressure, I want to look for the opportunities to buy, and now I will scroll down on a lower time frame and look for structures that will give me the reason to enter this buy trade. And now I want to show you some examples on the charts. Here we have British pound US dollar 4 hour time frame, and we will see that price formed this strong bullish trend here. But if you look closely, we will see that price formed this resistance here. So price tested this resistance level here, 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 and here. So here we can clearly see this massive bullish move, then price broke our bullish trend line, and then it went back to test these previous highs and form this resistance. So now at this point here we can say, okay, price is testing our resistance zone, Maybe I can go down on a lower time frames and look for my opportunities to enter a sell trade. And now we will scroll down on a 1 hour time frame to look for our entries. So now we are on a 1 hour time frame and we will see that price formed this bearish wick rejection. And after that it formed this massive bearish candlestick. At this point you can say, okay, now I will definitely look to sell. And then you can wait for your entry reasons, or you can enter here right after this candlestick formation. But if you look closely, you will see here that price formed another resistance. So we have this major resistance on 4 hour time frame, and then we scroll down on a 1 hour time frame and we noticed this new resistance zone. We spotted that price formed bearish wick rejection, massive bearish candlestick, and now new resistance level. And this bearish reaction to this new resistance level can represent a very good entry level. Now you have many reasons to believe that price will continue to go down, especially because on a 4 hour time frame we saw that price broke our bullish trend line and retested these previous highs. So that is a sign of a potential reversal. And on 1 hour time frames we just found our reasons to enter a sell trade. So we can enter, for example, after this strong bearish candlestick formation, put your stop loss above this resistance and aim for these previous lows. Of course, these time frames depend on your trading style. For example, if you're a day trader, you can use lower time frame, for example 1 hour time frame and 15 minutes time frame to enter. If you're a scalper, you will need much lower time frames, like 5-minute time frame and a 1-minute time frame. If you're a swing trader, you can use daily time frame to analyze major zones, and you can use 4 hour time frame to look for your entries. Now let's look at this New Zealand dollar US dollar 4 hour time frame. And we will see that price formed this strong support zone here. It formed massive bullish reaction, but then bears took the control and pushed the price down, and price tested this previous support again. So now at this point you can say, okay, I have this support, I have major bullish wick rejection, and also stochastic RSI is giving me a buy signal. So after this candlestick here, you can say, okay, now I want to look for the opportunities to buy, but I will do that on a lower time frame. Now what we will see here is that price formed this bullish engulfing candlestick pattern. So we have a reaction to this 4 hour time frame support with a strong bullish engulfing candlestick formation, and here also we have stochastic RSI buy signal. Price then formed this new candlestick that also had strong bullish wick rejection, and at this point you can say, okay, now I will enter a buy trade. For example, I will open my trade here, I will put stop loss below this previous support zone and aim, for example, for this previous high. Or you can say, okay, now I have 4 hour time frame support zone. On a 2 hour time frame, I have this bullish engulfing candlestick formation, I have stochastic RSI buy indication, and now I will scroll down on a 1 hour time frame to enter. Now what we will see on a 1 hour time frame is that price formed this bearish trend line. If you look closely, we will see that on a 1 hour time frame, stochastic RSI is giving us a buy signal again. This happens rarely, that on a 3 different time frames we have stochastic RSI buy or sell signal. So this was a very strong indication that price will continue to go up. But let's say that you are a patient trader and you wanted to wait for a pullback. As we can see, pullback occurred here and price formed a new higher low. After that we can see this massive bullish candlestick, and this can be your entry level. You can enter here, put your stop loss below this previous low and aim for this previous major high. As you see, now we combined 3 different time frames. On a 4 hour time frame we had a major support zone and we had stochastic RSI buy signal. On a 2 hour time frame we had a bullish engulfing candlestick formation, and we also had stochastic RSI buy signal. And finally on 1 hour time frame we spotted that price broke our bullish trend line, formed a new higher low, and also very strong bullish candlestick. So when you combine all these reasons, it is very reasonable to enter buy trade here. Now let's look at another example. This time we have Australian dollar US dollar, and what we will see here is a bearish structure where we have series of lower highs and lower lows. If you look closely, we will see here that price formed this bearish flag pattern. And also we will see that price retested this previous low. So we have a new lower high that retested this previous lower low. So here after this breakout you can say, okay, now I have bearish structure, I have retest of a previous major low, I have flag pattern, and I have a breakout. Also I have stochastic RSI sell indication, and now I will scroll down on a lower time frame to look for my entries. So we have breakout that occurred on a 2 hour time frame, and that is the point when you said, okay, now I want to sell and I will look for my entries on a 15-minute time frame. Now we are on a 15-minute time frame and we are looking to enter. So we had a breakout, and then as we can see, price formed this bullish pullback that retested our flag pattern, and also it retested it with a bearish engulfing candlestick pattern. So now on a 15-minute time frame we have new reason to enter a trade. We have this bearish engulfing candlestick, we have retest of our flag pattern, we also have stochastic RSI sell indication, and if you look closely you will see this series of lower highs that we can connect with a bearish trend line. And at this point you can say, okay, now I will definitely sell, put a stop loss above my candlestick and aim for some previous lows, for example this one here or even this one here. This low level here is a better choice because we will get better risk reward ratio. So the beauty of multiple time frame analysis is the fact that you can find multiple reasons to enter a trade. This approach helps you to form a certain plan and to follow it. So in this example, we have a higher time frame, 2-hour time frame, and we have a bearish structure. We have a retest of previous low, we have a flag formation, and we have breakout. We also have stochastic RSI sell indication. And after this breakout, you can say, okay, now I will definitely look to sell, but now I need exact point where I will sell. And then you go down on a lower time frame, 15-minute time frame, and we spotted that price retested our flag with a bearish engulfing candlestick formation. We also had stochastic RSI sell indication, and if you remember, we had bearish trend line that connected previous lower highs. So that is 1, 2, 3, 4, 5, 6, 7, 8 reasons to enter a trade. And that is the point of a multiple time frame analysis, to find a confluence between many reasons to enter a trade. Not just to enter based on a one candlestick, but to deeply analyze the price and find multiple reasons why it is a good choice to buy or sell at that certain point. There are many good things about using multiple time frame analysis. And actually there is only one bad thing about multiple time frame analysis. And that is the fact that you can be very confused about the price movements. So if you analyze 3, 4 or 5 time frames, you will see these many zones, many trend lines, many price moves, many highs, lows, key levels, different indicator showings, and you will simply become confused. You will not be sure where to buy, where to sell. But again, if you analyze 2 time frames, you only have benefits. These benefits are very good because if you go up on a higher time frames, you will be able to spot some zones that you are not able to spot on a lower time frames. So for example, if you look at this on a 5-minute time frame, we will not be able to spot that this here is actually very strong resistance zone. So for example, here you will see this massive bullish trend and you will say, okay, now I want to buy. They have these higher highs and higher lows, so after this strong bullish candlestick I will buy. And that is okay, but again, if you go up on a higher time frame, you will actually see that there is a resistance here. So it is possible that price will continue to go up, but then it is very reasonable to expect some kind of a bearish pressure here. So on a 5-minute time frame, you were not able to see this resistance zone. And on a 15-minute time frame, you are able to spot this zone here. But then if you go back, you will actually see that price tested this resistance. In this case, it tested it with a double top. And what we also have is this bearish engulfing candlestick formation. So we have this minor bearish reaction to this resistance zone. And maybe now at this point you can say, okay, I have this support zone here and I will wait for the price to break it, go up to retest this zone, and if my stochastic RSI is giving me a sell signal, I will definitely enter my trade. And now at this point you have a plan to follow based on a multiple time frame analysis. And this is how you can implement multiple time frame analysis into your strategy. If you're a beginner, don't use more than 2 time frames, use higher time frame for major zones, and then use lower time frame to look for your entry levels. I hope this video helped you to better understand multiple time frame analysis, and if it did, please like and subscribe so I can continue to make more videos like this. Thank you very much and see you in the next video. Bye bye.